Hello people, welcome to ForexX. Today I am going to explain your day trading strategy step by step. So let's move straight into the video. Step number one is market order flow. Firstly, we have to look at the market order flow, that it's trending bullish or it's trending bearish. Uh, it's trending bullish means it's continuously making higher highs and breaking structure to the upside. And trending bearish means it's continuously breaking structure to downside, just like this. It's continuously making lower lows. It's continuously making lower lows, and in bullish order flow, it's continuously making higher highs. We have to identify this order flow because it's very crucial in this strategy. We are not going to trade in sideways trend. We are not going to trade in sideways trend. Mainly sideways trend is when market is not breaking structure and creating liquidity. So step number two is finding a resistance. Mainly resistance we call the area from where market is continuously pulling back, not breaking that particular area. We call that area as a strategy, because if we choose wrong resistance area, so our strategy gonna fail. So step number three is we have to wait for the market to break this resistance with a great momentum candle, which is an indication of that the buyers are in the market. So we have to patiently wait for the resistance which we had picked and wait for the market to break the resistance with a great momentum candle. So step number four is picking right demand zone. So the right way to pick the demand zone is we have to use Fibonacci retracement from top of the move, from bottom of the move to top of the move. We have to pull and below 61%. Below 61%, we will mark our demand zone. We will not pick our demand zone above 61% because it's against our strategy. Step number five, which is one of the most prominent step of the strategy, which is liquidity. Wait for the market to create any type of liquidity, like double bottom or double bottom, trendline liquidity, etc. Is engaging early buyers. Mainly the reason of the liquidity is engaging early buyers. Mainly the market is collecting money from here because early buyers are engaging. After anytime soon, the market's gonna break this liquidity and tap our demand zone. Step number six is confirmation. Once market swap the liquidity to downside and tap our demand zone, so we have to look for confirmation. So we should drop down to 1 minute chart and look for change of character, just like this. So we have to look for break of structure to downside. I'm gonna also show this example on the chart, don't worry. And it's gonna tap the demand zone and it's gonna go It's gonna follow its trend. Just like you can use also other confirmations such as momentum shifting candles. If you are not familiar with this, so you can also, if you are not familiar with this, you can also use bullish engulfing candle, which is one of the best candle I had used. During the execution, our stop loss will be below the demand zone, below the engulfing candle. Mainly engulfing candle we are using as a confirmation because it's a momentum shifting candle. So let's look at the chart here. Here I got an example, and here we can see that here is a level of resistance. Market is tapping and pulling back to downside. Market is tapping and pulling back to the downside. This is the perfect example. Here we can see market break the resistance with the good momentum candle. Here we can see that. So market is now market is creating trend line liquidity. Market is in early buys, then it swapped the liquidity to the downside. Once market tap our demand zone, once market taps our demand zone, and most crucial thing, we have to pick demand zone below 61%. This is also a demand zone, but it's not up to mark. It's just between 50 and 61. So we are not considered it as a demand zone. Below 61%, here's a demand zone. Here we can see that. Here is a demand zone, and once market tapped our demand zone, we will drop down to 1 minute chart. Then we will drop down to 1 minute chart. Here we can see that it created a sweep to the downside and change of character to the upside. Then we will mark a demand zone. Here is our demand zone.